Good morning, everyone. Thank you for those who are on time. We do have a packed house today, so we're going to just give it maybe a minute, maybe two, just to let everyone get on. But timing is very important to me, so I do appreciate those of you who are on time here. Just give it another minute, maybe two, and we're going to get started and have some fun here. Hopefully, you're all ready. Graham, I see you on the call here. How you doing, buddy? Excited to go over some information here with you. I always like to give a few shout outs for those who are on time. Good morning or good afternoon, depending on where you're in the country. My name is Josh Elohim. I'll be your speaker for today regarding helping your business owners stay protected. Just some quick housekeeping for the call. Everyone's going to be muted so we can get through this smoothly. Please, there's a place in the question there so you can go ahead and ask your questions. I promise I'll do my best to get to as many as I can. If for some reason you are not signed up and quote and apply, you can go ahead and go into the chat box. There's a link that you can click on and go ahead and get started. If for some reason you can't see that link, you can just put it in, again, in the questions, plug in your NPN number if you don't have access to our software. So without further ado, let's go ahead and get started and have some fun. So if everyone can see my screen here, you know about our software, Quote and Apply. So I'm just going to kind of next through here. Just to kind of go through, we'll just put in some basic information. Look how nice this isn't this nice and easy with our open API? All right, so what I want to talk about here is kind of four things. I want to talk about some of the basics with key man and buy sell. We're going to go over that. We're going to go over creating non-reportable tax-free income, and we're going to go over long-term care riders. So in my opinion, a lot of business owners are, employees or clients are taken care of. But when it comes to the owners, a lot of us fall short with being able to help plan for the business owners. And that's really, and to me, a lot of the greatest opportunity is with the business owners. So to try to keep this simple, I'm going to start with the most basic thing here. So the first thing a lot of business owners need is key man insurance. What is key man? It's just like it sounds like. I have a key employee that I can't live without. If they're not here tomorrow, what happens to my business as the owner? I'm going to be in some trouble. So hence, key man is very, very simple, very, very straightforward. So again, I have an employee. I'm the owner of a company. Maybe I have more than one, but I have a key person that I cannot live without. This insurance is normally funded with term insurance. Why? Because agents are comfortable with term insurance. I need this person. If I'm not here tomorrow, if they're not here tomorrow, I need $1 million to cover that person for the next 10 years or until whatever it might be, until I can get back on my feet here. Term insurance, very simple way to cover that need. To make it very simple, how is this policy owned? It's owned like a regular life insurance policy. It's the same exact thing. The only difference is the ownership. I'm a big visual guy, right? So just to give you a visual, let's say that we decided I need this $1 million term for 20 years here, right? If it's a key man policy, I would hit the continue button. I go right into the application. I'm just going to click on 3 steps in, and the question they're going to ask is about the ownership. Will this employee own the policy? The only difference here from a normal term policy to a key man policy is the answer is going to be no. Who's going to own the policy? It's going to be a business. Does everyone see that? When it is business owned, guess what? The business owner is able to write off those premiums because he's not the owner of the policy. That's a positive there, right? So I'm going to put in my basic business information here, right? The owner is going to be the owner of the policy instead of the individual. The insured is still the employee. The owner is the company. Is that pretty straightforward, everybody? It's not, that's really it. The only difference. It's really simple. So I just want to go back here. Does everyone see what I just did right there? A lot of people get confused with, with key man, that it's something different than normal. It's the same exact thing. Now, again, I'm a big believer, believe it or not, in using permanent insurance for a key man policy, and we'll discuss that in a second. So that's really a key man policy. I have a key employee. I can't live without him. If he's not here tomorrow, then my business is in trouble. Makes sense, everybody? I'm going to explain about the permanent insurance, because what if he hands in his resignation and says, hey, I'm here today, but instead of just passing away, here's my letter of resignation. So we're going to talk about that, and that's where permanent insurance can be a great resource. Please ask questions if you have anything here, pop them in there, and I'll answer them when we finish here. The second thing I want to talk to you about is going to be a buy-sell. So now we have, instead of having a key person, we have key owners. A buy-sell normally is done when you have more than one owner. So listen, I have two partners. Keep it simple, right? If one partner is not here tomorrow, do you know that there's a good chance that you're going to be in business with that person's spouse? They're going to be coming to you saying, hey, where's my piece of the business? I may want to keep things going, let you run the business, or I might just say, hey, where's my money? I want to get paid for this. So you ask your business owner, are you protected in that hypothetical? If one of you is not here tomorrow, what happens to the business? A lot of businesses are done on this right here, right? That's what businesses are done on. So the answer is going to be no for a lot of people. And that's where a buy-sell agreement comes into place. So we do not do the buy-sell agreement here. That's drafted up by an attorney. So I always encourage people, if we're going to have the conversation about a buy-sell, a key man or buy-sell policy, it normally starts with an agreement from an attorney, the buy-sell agreement. A lot of the times that's not in place. If it is in place, it's not funded properly, right? Okay, so we have a buy-sell agreement. Great, good job. How is this being funded? We have no idea. It's not being funded. Okay, well, that's where life insurance can come into place. A lot of people get confused with, well, how much should this life insurance policy be? To keep it very simple, what is your business worth, Mr. Business Owner? So I'll use some very simple numbers. Let's say the business is worth $1 million. So if I have two partners, all I'm going to do is I'm going to do $500,000 on each person's life. That's really it. And then how long? So if it's term insurance, how long do I do that for? So I had two policies, $1 million each. How do I own these policies? Well, it's the same thing I showed you before. The only difference now is the ownership. We're going to do what's called a cross purchase, meaning each person is going to be the owner of the other person's policy. Does that make sense? So if one person passes away, the other person is the beneficiary. In your buy-sell agreement, that's where you can set up what you agreed upon. Hey, so if I'm not here, hypothetically, I'm one of the business owners, I'm not here, I want to make sure in my agreement that it says that, whatever it might be, $250 will go to my spouse to cover my part, the other $250 will go to my partner. Whatever the agreement is, that's typically done through a buy-sell agreement. So a very easy way to, instead of asking someone if they want to buy a life insurance policy for their business, a real simple question to ask people is, I want to review your buy-sell agreement. And a lot of time they're going to be like, I don't have one, or whatever it might be. Just want to review what you currently have. Do you have I know that you have, so as you being my client, I know that you have two business owners, right? So ideally you can just ask that question, right? I just want to know, I want to review your buy-sell agreement. And it makes them say, well, either I don't have one or whatever it might be. Now it gives you a chance to open the door, right? So that's basically a buy-sell policy there, right? So we talked about key man insurance. We've talked about buy-sell. It's the same thing. We can use term insurance like you're seeing here. Most of the time, this is funded by term insurance. Why? Because I'm not comfortable having that permanent conversation with the clients. Well, as you know, that's where we come into place. As your marketing manager, if it's not me, whoever your marketing manager is, we are extremely comfortable having those conversations. I just got on the phone with an agent and their client, and we talked. There was 3 partners in a firm, and we had the conversation, and we talked about the basics, and then we got to more advanced stuff. Instead of that being a $2,000 or $3,000 buy key man policy, we turned it into a $45,000 sale. Not because I'm anything special, just because my gift is to keep it simple, and then I can give you visuals at the same time, right? So that's key man. And I'll talk about the permanent insurance, but again, the most simplest form, I have a buy-sell policy. We set this up. We're going to figure out what the need is. If we go with term insurance, I'm going to go through my application right on the spot here. Same thing. Who's going to own this? So who's going to own this policy, right? Will the insured own the policy? The answer is no. Who's going to own it? The business will own it. Again, we're going to set this up now where each person is going to own the other person's policy, correct? And again, that's called a cross purchase. So very simple, very straight to the point. Let's go back here. Okay, so now what are some ways to fund this? What policy should I use? Term? Should I use permanent? Most of the time, people use term insurance, like I mentioned to you, right? Because it's very simple, it's very easy to go. So now let's get into, I do want to talk about the permanent side. And again, this can be used for these key man and buy sell policies as well. But now we're going to talk about for the business owner creating non-reportable tax-free income. Make sense? So we're going to go to lifetime coverage here, right? Now's where the fun starts. Okay, Mr. Business Owner, I know that you're considering doing this for key man, you're considering doing this for buy sell, right? Term insurance is, for me, it provides a great need. You give me a penny and I give you $1 if something happens. I always pick on myself. I'm married, I have 5 kids. I have $4 million of life insurance, of term insurance, worth much more dead than alive. But if something happens, my family's going to be taken care of for a day or two, right? We're in California here. So for a couple of days, my wife can be able to live it up until that money runs out. So what is the negative side of term insurance? I have less than a 2% chance of using it. That's the negative side, right? And for me to use it, I'm not going to be able to use it, right? So if I'm a business owner, I know you're saving money on term insurance, right? It's a lower cost. Is it a lower cost though if you don't ever use it? That's the $1 million question, right? So I always give people 2 options. Let me give you what you're asking for. And once I do that, it gives me permission to show you another recommendation as well. Would you all agree? I would as well. So here's what I would recommend. So let's say we need $1 million policy. Instead of doing the term insurance, I can say, hey, how about we do what's called an accumulation sale here? And the beauty of our software is I can click on this, right? And it's going to show a permanent illustration in seconds. Did everyone see how fast that was? I can't even finish my lines anymore. It just happened so quickly. All right. So let's say this is a business owner, right? I showed him the term insurance for $1 million. Now, here's my alternative. This is called a max non-MEC. Does everyone see that right there? That's a max non-MEC premium. It just means that based on $1 million death benefit, what's the most money I can put into this? So it's kind of the opposite of term insurance, right? Term insurance is the least amount. Well, why would I put in the max into this policy here, right? Reason being is that when we do this the correct way, which is what we call max funded, it's going to allow you to grow cash value very quickly in these policies. Okay, so now as the owner, I can do this. So there's my max non-MEC. We talked about that. That's the most I can put in. You don't have to do that, but this is an option here, right? Here's how I would run this if this was for a business owner, right? And actually, before I dive into this, I want to have why are we having this conversation, right? Before we dive into the real, and I'm going to click on here. Hopefully you've all seen me. I'm a big believer in visuals. A lot of us forget as agents that as people, 90% of us learn visually. So a lot of agents just talk people to death till they're blue in the face, but they don't give them any visuals. The reason why I have a 90% close ratio is not because I'm anything special, because everything I talk about, I physically show. So when a business owner gets on the call with me, I say, hey, we know everyone hates life insurance, including myself, ha ha ha. But what do I hate more than life insurance? And they'll read it off the screen, paying taxes, exactly. So this piece shows you my top income earners for my top tax rates. And for those who are in California, we add this up, we're close to 50%, which is why you probably don't live here, right, Sean? So I call this the bucket sheet. This is where your client's money is. No better way to get someone's attention than talk about their money, right? So look, we have these buckets here, my tax deferred bucket, my 401ks. To me, if I'm an employee and someone's willing to match me on a 401k 5-7%, that's a no-brainer to put that 5-7% into that bucket there. Now the business owners have it a little bit different because they're the ones that are setting up the 401k. So obviously they get an advantage for their employees, but for them, what really happens for them? So to me, this is a great bucket. I'm a firm believer in this. And then you have your taxable bucket, your stocks, your bonds, your mutual funds. Another great bucket, in my opinion. Where else can you put in 100,000 and earn $1 million, right? There's really nowhere. It's a great vehicle. And then you have your tax advantage bucket, which is like your Roth IRAs. The problem with this bucket is people who make too much money, they don't qualify for this bucket here. So normally with the business owner, if I didn't have their attention before, I have it now because we're talking about your money, Mr. Business Owner. I get your attention, right? Okay. The problem I see is a lot of people focus on growth, but what do they forget about? Distributions. So what does this look like when I want to pull this money out of here? So have a look here. Does everyone see these little spigots right here? To me, these are all considered investments. Why are they considered investments? Because I'm going to have to pay taxes at some point on the money here, right? So here's the question. How am I being taxed on these three great buckets, pre-59.5 up to 70.5? Because again, it's not how much money you make, it's how much you get to keep, correct? So this is when people usually lean in forward, the business owner, and they get quiet and they're really listening because they see that we're talking about their money. Josh, I didn't really think about, distributions. I'm so focused on growth. Listen, I would never tell anyone to put all their money into life insurance. To me, that'd be foolish. These are great vehicles for your business owner, and I'm hoping that most of them are diversified and taking advantage of these buckets here. So look here's your sale. What if there's a way if I could show you how to create non-reportable tax-free income? Is that something you're interested in, Mr. Business Owner? No one said no to that in 12 years. So I'm assuming he'll say yes, right? Or her will say yes. Well, there's one more bucket you may not be familiar with, and that bucket's called life insurance. Most people say, I thought life insurance was for a death benefit. No, that's called term insurance, right? So the question is, how am I being taxed on this great bucket, pre-59.5 up to 70.5? And as you all may or may not know already, the real beauty of cash value life insurance is the money grows tax deferred, and I can take the money out tax free. So I'm going to use this as a reference point, right? And again, a lot of people know this, but until you give them the visual and you talk about it, then it clicks. The business I was on the phone with, which I told you about that they were a CPA firm. They should know this stuff, right? But again, they know it. But again, until you show them and talk about it, that's when it physically sticks here. So I'm going to jump back and forth here, right? So let's go back to here. So now that I've had that conversation with the owner, right, I can get kind of specific here on the call. So here's what I would recommend, right? We can obviously change this $1 million to whatever number you want, but to me, $1 million is a great pivoting point because I could say either how many million, this is what it is per million, right? How many do you want? Or if we need to chop it down. So what I would recommend is a business owner can see the next 10 years down the road. So I'm a firm believer in doing a different option. We can pay to age 65, but I like a 10 pay. By the way, this is a 43-year-old, give or take. So this is a great option for a business owner. Another big thing is long-term care. Would you all agree? That's a big issue right now for a lot of people. What if I was able to add a long-term care rider on the spot to this policy? Truly a game changer for a business owner. So I just added a long-term care rider and I made this at 10%. We're going to show max distributions from 66 to 90. Is everyone with me? Perfect. So I'm going to hit the rerun illustration button. Never in the history of our business have you, the agent, been able to pivot so quickly right in front of your client. So normally in the past, this stuff takes, 5 or 6 meetings to close, right? Well, because of our software, I can manipulate the illustration right in front of you. Does everyone see how fast that was? Look at, here it is. I just made the, does everyone see I just added the long-term care rider right here? That's on the policy now. So if I want, I can click on this PDF button. I can actually dive right into the illustration. People are blown away by how quickly you can pivot. So we all know if I can answer all your questions, typically that gives me a much better chance of you saying, let's move forward here. Would you all agree? I would as well. So I just clicked on the PDF button here. Could you all believe that we're literally dancing on the spot here, right on the illustration? I mean, people, it's funny, millennials see this here and they're like, this is the way it's always been. Well, hopefully there's some people on the call here that have been doing this for a while and know this is definitely not how it's always been, right? There may be some agents on this call that have used to do illustrations with a rock and a chisel, right? So we know that this is not the way it's supposed to be. Let me just dive down here. This is kind of how I go over this with the owner. By the way, if you want to interview me for being comfortable talking to your clients, this is my presentation for the most part, right? So look at, I try to give people visuals. The first thing I want to show them, we have 3 bells and whistles in this policy for the business owner. My first bell and whistle, how about a pool of money for long-term care? Again, if I have a key man policy, that person could need long-term care. If I have a buy-sell policy with 2 business owners, forget about someone dying. What about if someone needs long-term care? We're creating a pool of money for that person to use for long-term care. So look at, I have $1 million. Let me zoom in here. Can everyone see this okay? I have $1 million pool of money. So I don't know if you all know how long-term care riders work. Let's keep it simple. I have $1 million pool of money. I add the long-term care rider. It simply gives me a pool of money for long-term care. If I have a long-term care issue, I can draw down from that death benefit dollar for dollar. If I don't have a long-term care issue, I have other ways to use this now. And that to me is the biggest challenge with traditional long-term care is it's really use it or lose it. You could pay premiums for 20, 30 years, never have a long-term care issue, and all your money is gone. That's pretty expensive auto insurance. Would you all agree? So now I've covered 1 bell and whistle. If I use this for long-term care, the money can be used tax-free. I can get up to 4% or up to $40,000 a month. Why do I say up to? Because the way these work, there's no inflation built into these. There's what we call a per hip per diem amount, which is allowed. So in California, it's $320 a day. So the most, if I multiply that number by 30, I can get around $10,000 out of this policy today. But we know that as inflation increases, that per hip per diem amount is going to increase as well. So that's how we can get up to $40,000. Does that make sense, everybody? So what's this policy cover? Here you go, visual. There you go. This is just like long-term care. You can't use the word long-term care if it's not the same exact thing. People want to get taken care of in their home. Would you all agree? I would as well. So there's my, how do I access this money? It's just like traditional long-term care. I have to have 2 of the 6 ADLs. I can't feed myself. I can't bathe myself. A 90-day elimination period, and I can draw down from that death benefit dollar for dollar. Does that make sense, everybody? So now you're giving your business owner the ability to have this included in their key man or their buy-sell policy, or they just want to have this for their retirement income, right? Okay, so there's my long-term care. You can, what if I have 2 business owners? How would I do this? I could do $500,000 for each person. Or if they see the value, we can do $1 million for each person. So I show that. Let's dive down to the meat and potatoes. How does this work here for the business owner? You see, I spend a lot more of my time on permanent insurance than I do term, because I would hopefully agree that most of you understand term insurance. It's pretty straightforward, right? Well, this is where there's questions and this is where there's confusion. So let's get right into it here. So here's my illustration, right? Just to give you a visual, we got a male, 43, preferred non-tobacco, okay? This looks much better on a 43-year-old as it looks on a 63-year-old. Why? It's just time. That's really it. This is not a new secret here, right? I'm sure you've all, this is just compounding interest, right? I'm sure you all remember this in your accounting class in college. The professor said if you put away $1 a day from age 18 to 65, you'll be a millionaire. I didn't listen. Did anyone else listen there? I didn't listen either. So hopefully we can make it up now, right? So here we go. So we got a male, we're putting in $1,000. I'm sorry, we're putting in for We're putting in $59,000 a year. Does everyone see that? Now, we're not doing this forever. We're doing that for 10 years. This is what we call an IUL, or Indexed Universal Life. Let's keep this very simple. In the past, we had variable life insurance. Let's say the market hypothetically did 20%. You get 20% to your account. You're very happy. You're like, yes. Next year, the market does minus 20. You're absolutely devastated. It's very hard to recover from a negative loss with these policies as well. Well, the carriers finally got smart and they created something called IUL, or Indexed Universal Life. Let's use the same exact hypothetical. Market does 20%. You don't get 20, they give you a cap of anywhere, call it from 8 to 12 on these products here, right? So you'll get that cap of 8 to 12. But next year, when the market does minus 20, now you have a zero floor. So the way this works for your business owner or for your client is your client's going to participate in the upside of the equation, but not the downside. Does that make sense, everybody? So we call that stability, right? I love an IUL. I'm a big believer in it. Now, you may have gotten some negative, connotation about IULs, but a lot of times it's because they're not funded properly. They're not done correctly. Well, guess what? This is the right way to do this, which is what we're shortening it down and we're paying more money. It's called a max fund scenario. So, okay, this is based on the S&P 500. Whatever the S&P 500 does for the year, that's what gets credited to your account. So it's really straightforward. We're running this at a 5.76% interest rate. Does everyone see that? Okay, here's how it looks. I put in my 59K as a business owner for 10 years. So I'm putting in $590 over 10 years. Cost of insurance, how does that work? Well, you put in your 59K. I take my accumulation value is what's currently growing in the policy right now. So I can take my 59K, subtract it from this number. Those are my cost of insurance charges year one. Is that pretty straightforward, everyone? Well, an easy way to explain cost of insurance charges, hey, Mr. Client, if you bought this policy today and you weren't here tomorrow for some reason, the carrier's on the hook to pay you out $1 million. That's the reason for the cost. Does that make sense, everybody? There's got to be a fee to cover that risk, right? Those are my cost of insurance charges. My surrender value is if I say, hey, I want to walk away and take every dollar out of this policy. So as a business owner, if they say, hey, can I pull this money out tomorrow? I would say, no, this is not the right vehicle for you. Now watch, the money's going to grow over time here. So look at, I put in my 590, right? This is real. If you look here, at some point, these numbers are going to be even. Does everyone see it right? Actually, it's year 11. See it right here? So what does that mean? That just means that my surrender charges are going to be gone at that point. So I'm not going to be losing any money at that point. But there are fees involved here, right? So look at, I put that money in, and let's just, because I have time here, I'm going to scroll down. This business owner at his age 65, he's still putting out of his business 590. Look what he has sitting in retirement income, $1.3 million. How's that possible? Time, that's it. It's just compounding interest, right? So there you go. So I have $1.3 million as a business owner. I can use this for retirement income. I can use it for my partner. I can use it for whatever I want. I have access to this money after the first year. I'll go over that in a second. Or the smartest way for this business owner to use this would be to supplement his retirement, where he pulls out 95K from age 66 all the way to age 90. And at this point, take a look at this. Because of time, he's still putting his 590, right? I'm taking out $1.8 million of tax-free income at age 90. Does everyone see that? And by the way, I still have, look at $170,000 burial policy. Not bad, right? That's really how simple this story is. Now, just so you know, we're being very conservative here. What I mean by that is we're running a 5.76% interest rate. The S&P 500 over the last 30 years has averaged around 10%. Now, because I have a cap on the floor on these products, I want to be more conservative, right? So here, we're showing 5.76. I think this is going to do more like 6, 7, or 8%, right? Now, you and I both know if the client's happy with these numbers, if it does 1 more percent, 6.76, we know these numbers change tremendously, right? This is the classic under promise and over deliver. Does that make sense, everybody? I'd much rather do it that way than pitch a high number and then have it be lower. Some of the questions that come up here, I'll just point them out up front. So here we go. Look how much time we have here. First thing is that this is what we call a flexible premium contract. And what that means is that, look, we're showing a 10 pay here. let's just say things are going really well with this business, is going well for the owner. Well, guess what? If I want, I can just pay year 11 if I want to, right? Vice versa, let's say in year 7, I have a really tough year with my business. Because you have cash growing in the policy, you could basically skip a payment. You can use the cash from here to pay the premium. Now, obviously, it does affect your cash values and it affects your death benefit, but clients want to know they have flexibility. That's really important to them. Another thing comes up is that your client, really after the first year, has access to this money if and whenever they want for whatever reason they want. A lot of these businesses have money sitting in the bank account for whatever reason. They have to have it. Maybe it's a construction company and they have these bonding requirements, right? They have to keep money in their account. Well, guess what? Life insurance is an asset on the balance sheet. So you're not asking people to part ways with their money. What are you asking them to do? If I have access to this money whenever I want, I'm just asking you to pull money from one bucket to another. It still counts as an asset on the balance sheet. So again, your business owners love to hear that. Your CFO loves to hear that in the business, right? Okay, so I have access to this money. So a question I always like to have some fun with, if you need 20, 40, 50 grand, Mr. Business Owner, for whatever reason, right? Which bucket do you want to pull from? I'll wait. Well, the answer is you don't want to pull from any of these buckets, correct? Because you're going to be taxed on all these buckets here. So I always try to remind people, why are we having this conversation? What are we physically doing? We're creating a fourth bucket that your clients don't have access to right now, your business owners. And that bucket is a non-reportable tax-free bucket. Is it designed to compete with these other buckets? No, because these buckets are all going to be taxed at some point. What are we doing? We're creating non-reportable tax-free income. And that's a good lean into, okay, so people ask me, like, is this really tax-free? Like, how does that work? Well, here, just to keep it simple, whatever you put into this contract is called your basis. So the way life insurance is supposed to work is you pay taxes on the front end for life insurance, which allows you to have a tax-free option on the back end, right? That's how it's supposed to work. Now, whenever anyone asks me about taxes, I always say consult with your CPA. I know a lot of business owners write this off as well. I close my ears. I say, you do your thing. Okay, so here's how it physically works. Up to my basis, I'm going to take that money out either via a withdrawal or I'm going to take it out via a loan. I'm sure you've all heard this: bank on yourself or become your own bank, right? Well, if you take it out via loan, the money will keep on growing, hence bank on yourself, right? If you take it out via a withdrawal, it's just like calling your bank and saying, hey, I want to take money out. They don't ask you any questions. The next dollar that comes out of that loan, now I'm going to switch up that policy. Now I'm going to switch over to a loan. I'm sure you heard the terminology, become your own bank. The carrier is going to charge you 1 or 2 or 3% on the money, but then what they do is they'll credit you back that 1 or 2 or 3%. We call it a wash loan. Now here's the key factor. As long as I never surrender this policy, I keep it for life and I die with it, what is the death benefit to the beneficiaries? Anybody? Anybody? The answer I'm looking for is tax-free, right? So it's tax-free. So that's how the money is tax-free. As long as you never surrender the policy, you're never going to have to pay taxes on the gains in the contract. Make sense? So another thing that comes up here, right? So we talk about that. We talked about how I pull money out here. We've talked about for the business owner. So this is my second bell and whistle, by the way. And this is what we call a living benefit. Normally, life insurance is known as a death benefit. This is a living benefit here because I can use this while I'm alive. Business owners love this story here. They understand. The third thing is obviously my death benefit, right? So if I live too long, if I die too soon, I have a death benefit, right? Perfect. Well, what's the key thing with the business owner? The last thing you wrap this up with is, guess what? Just so you know, you can pay this premium out of your business. That's where they say, what do I sign? Right there. I can pay everything I've shown you, I can pay for out of my company. This is phenomenal. This is great here, okay? So that's why it's good to talk to business owners about this, because what's the hardest part of our job besides finding clients? Finding the premium to pay for this, the dollars, right? Well, if I have the money sitting in my business, I can pay for this right out of my company. That's how you close the deal right there, and they realize that. So I do want to point out one more thing that I always tell people. This is important. A lot of agents run from this. What's the worst case scenario? Well, here I sleep very well at night because I don't hide anything. Here you go. I call this Armageddon, by the way, because there's two things that have to occur, which have never happened in the history of our business. The first thing is that the life insurance carrier in this situation nationwide has to charge their max cost of insurance charges every single year. It never happened in the history of their business. They've been around for hundreds of years. But the second thing is even crazier. The S&P 500 has to do zero every single year. If those two things were to occur at this client's age, have a look here, 67, they'd have to put more money into the contract. Does everyone see that? Now, would you all agree if the S&P 500 is zero for 24 years, it's not just the insurance bucket that's in trouble, it's all these buckets. Would you all agree? So again, that's the worst case scenario, zero. And by law, we have to have that in our contract. So if anyone asks for that, I don't even wait for them to ask. I just show it to them. So we don't think this is going to happen. What do we think is going to happen? This column right here. Does everyone see how I explain that? Very simple, right to the point. Perfect. So again, to recap, there's 3 bells and whistles with this policy for the business owner. A pool of money for long-term care. If I use that for long-term care, I can do it tax-free. If I need it, if I don't use it for long-term care, that's a living benefit. I also have the cash value growing in the policy, right? I have that option there. I can use that if and whenever I want, for whatever reason I want. It's another living benefit. It's owned by the company. It can be paid for by the company. And then my third bell and whistle is what everyone knows is the death benefit. You see, I say that for last. A lot of people already know about a death benefit. So again, I have 3 bells and whistles with this great policy here. Why is this better than term insurance? You could pay term insurance for 20, 30 years, never have an issue, and all your money's gone, right? That's term insurance, right? That's how it works. Why would I use this for my business? Well, you're going to get a return here. Not only a return, but you're going to be getting a lot of cool things here with this policy here. Does that make sense, everybody? So we talked about, just to recap, I don't want to go through for the most part, you've all seen the application. So I like to spend these times when we're talking about a little more advanced stuff, I like to focus on how this can be done. Josh, I'm not comfortable yet having this conversation. You could literally go into my system, into the boss, and book a meeting here with your business owner. This is where I shine the best. I'm very comfortable. I don't oversell anybody, anything. I literally just spread the good news. And it's really up to you and the client to make a decision. But when you answer people's questions on the spot and you can pivot with them, hey, what's 500 look like? What's 750 look like? They tend to make a decision right there because they see the value. And we still have to go through an underwriting and application, correct? So we're not really doing it right there. We're just going through the process. Perfect. That's what I have for today. Please go ahead, and I see questions already in here, but please go ahead and ask your questions. If for some reason I'm not your marketing manager, reach out to your marketing manager. They can help with the point of sale here and get these cases done. This is not for all your clients. For me, who has the most success, handpicked maybe 3 to 5 of your clients. You know your clients very well, who this could be a good fit for. Let's get on the call. Let's educate. All we're doing is educating people, right? They make the decision. Perfect. Well, again, I thank you all for being on this call here. Go ahead and put your questions in. We'll try to answer as many as we can. If you need me to book a meeting on my calendar right there, if you need me, I'll go ahead. I'd love to be more than happy to get on the call with you and your business owners. This makes a lot of sense. We just got to start having the conversation. And then I'd much rather them come back to me and say, you never told me about this, as opposed to, hey, you told me about this, but I can't afford it, right? So let's put the ball in their hands here. Again, thank you all for being on the call. Ask your questions now. We'll give it a second. We'll get those answered, and we'll go from there. Talk to you soon, and have a blessed day. Oh, I love this question. So someone said, how does Back 9 compare with Ethos or like a Policy Genius? Well, I never want to talk negative about anybody. This is the feedback I've gotten from other agents, just so you know. So we're talking about business owners here, right? But when it comes to Ethos, guess what? You're not the agent on those cases. They take care of everything for you. And also, they don't do business cases. So you can't have the policy owned by a business. It has to be owned individually, negating pretty much everything we just talked about right now, correct? So that's something that's really big. Policy Genius these are companies that basically have kind of done it backwards. They're just dumping their tech companies first, trying to become life insurance carriers. We are the opposite. We know how to wholesale life insurance. We've been doing this for 20 plus years now. I've personally been here 12 years myself. We're very comfortable with wholesaling life, disability, annuities, long-term care. We know all the problems and all the frustrations of agents. And we did this crazy thing where we actually listened. I know it's crazy, but we actually listen to people. So we built this software basically by agents for agents, if that makes sense. So we know exactly what you need, what you're looking for, and we also listen. So again, we're really a wholesaler turned into technology here. So that's really the biggest differentiator. Instead of just pouring, hundreds of millions of dollars into technology and trying, and then a lot of those guys are also term players, right? They want to master the term space. We do every type of insurance here. We're not just single-minded here. So hopefully that answers your question there, Jim. So more questions here. So someone said, how is the increase in the value of the business handled? At the start of the business buy-sell agreement and worth 500. So what happens if the business increases in value? That's a great question. So you really have two options. You can go off what the business is worth today, but you can also say, hey, we know this business in the next 5 years is going to be worth, it's worth X today, it's going to be worth Y tomorrow. So you have an option where you can obviously, if you use term insurance, it's very inexpensive. So instead of it being $1 million, it's going to be worth 5 million. You could just do 5 million today. That's an option for you. The other option is, you'd have to do a separate policy, but as the business goes up, you can create a separate policy. So that's kind of, I guess there's no easy way to do that, but that's how I would recommend it. If you know the business is going up in value, let's go ahead and do that, what that value is going to be down the road there. You can also do what's called blending, where you can do potentially half in term insurance and half in permanent, right? So I showed you, it doesn't have to be one or the other, it could be both. And then maybe that's another way to account for what the business might be worth down the road. Does that answer your question there, John? Perfect. So a few more, I love questions. So someone say, like, does the death benefit stay at 1 million or is the cash value included? So if you have a permanent policy, the death benefit, and what I showed you that illustration, this is what's called, let me give you all the visual here. So you see in this illustration, this death benefit's going up every year. Does everyone see that? There's a reason for that. This is called an increase in death benefit, or option 2. Does everyone see the increase in there? That just means it's a way to get the most cash out of the policy. So if you look here, during our income, when we're paying these premiums, during our funding years, we did a 10 pay. Well, guess what? For all 10 years, this is going up here. Does everyone see that? After my 10 years, we level this off. So now we switch to a level premium. At some point, this cash is going to increase so much that we're going to have to, it hits what's called corridor, so we're going to have to push this up. Now, in this hypothetical, we start taking out distributions here, so it never gets to that point. But if we didn't have any distributions, eventually that death benefit would start going up again. Does that make sense, everybody? So we do an increase in death benefit, whatever. If I pick 20 years, it would have been increasing for 20 years. So during my funding period, we use what's called an increasing death benefit. That's a good question. A few more here, we'll wrap this up. So someone said, does the BOSS system have final expense insurance as a product or option? And then also Medicare supplement or Medicare Advantage. We do not offer the Medicare part, but we do have final expense. So just to give you a quick visual, the rule of final expense, you have to be 45 or older, and it's $40,000 of death benefit or below. I have to change the date of birth. This is a 43-year-old, so it won't work here. But again, 45 and older, $40,000 or less of death benefit, and you can get final expense there. For 25,000 or less, we have guaranteed issue, and that's typically with Gerber. Just a heads up, okay? So hopefully that answers your question. Let's go back here. So someone asked, can the business deduct the premium? If it's a key man policy, or if it's a key man policy and they're not the insured is not the owner, then you can deduct the premiums. It's just if it's you are the owner, then technically you're not supposed to. Consult with your CPA is what I tell them there, okay? again, here's an analogy I use for people, right? Let's say we were a farmer, right? The question I ask people is, would you rather pay taxes on the seeds you're buying or taxes on the harvest? What works better for you? So, and then the question, because people will say, are taxes going down or taxes going up? I think most people would agree that taxes are going up. So I'd rather pay taxes now, and then if taxes do go up, again, I have a bucket here that's sitting here that's non-reportable. So I'm going to pull from this bucket first before I pull from anything else. I know a lot of financial planners are always concerned about putting money in the life insurance, and I just don't get it. When I give you the visual, you want to protect this bucket as much as you possibly can. This one right here. We want to let this grow as long as we possibly can. And for the financial planner, we want to keep the money in that bucket. Well, again, if they need 20, 50, 100 grand, which bucket are they going to pull from here? So we're creating that fourth bucket. This is not designed, this bucket is not designed to replace this. It's actually designed to protect this. Does that make sense, everybody? It's really just protecting all your other investments, because most people don't realize it, but they're going to try to pull money out before 59.5. Well, they're going to get hit with some pretty severe penalties, right, tax-wise. You just have to give people visuals and let them know what's going on here, okay? So hopefully that answers your question. That's a good question. Someone said, at what point do we get the employee's permission for key person? Well, you can't, I mean, the employee has to be involved, right? Because they have to fill out the application. So you're going to have them involved to do that. Do they have a choice? Obviously they do. But if I'm a key person, if I'm an employee, I would probably push to have, the benefit be split between my beneficiaries and between the company, right? But if the company is paying the premium, that's really up to the company, right? But the answer is the employee does have to have consent and be involved in order to be able to write that key man policy. So hopefully you've all seen a difference between like term insurance and permanent. You can use both for everything we talked about today if you want to. But hopefully you've seen there's a lot more bells and whistles that come with the permanent. Obviously you're paying more money up front, but you're getting a heck of a lot of money in the back end, and you have a lot more protection against what's going to potentially happen here. Great questions, everybody. I love questions. I'm going to go ahead and wrap this up here. Thank you so much for you all staying on the call here. Please, if you have more questions, reach out to me. If I'm your marketing manager, here's my information. Oh, so if I'm your marketing guy, then let me go back into here. Here's my contact information. If you want to give me a call, you can book a meeting on my calendar with your clients. If not, whoever your marketing manager is, you can do the same. I really appreciate all your time, and everyone's happy selling. Let's see if we can get some of these cases done. Talk to you soon, and have a blessed day.